about rates for a ninth consecutive session? Keeping rates low for longer. The question really is, how long can you keep rates low when normalization is happening? We have the Bank of Korea saying that normalization could take place this year.
Well, we have our inflation targeting framework, which determines our interest rates policies. And we look at three things in judging what to do with rates: economic growth, inflation, and financial stability. And if you look right now, the top of mind concern for us are things related on the economic growth front. We got hit significantly harder than other economies due to COVID, and our recovery is likely to lag those of other regions. So in terms of the speed and pace of renormalization, those will have to respond to Thailand-specific considerations rather than more than just what other countries are doing, what's happening on the global front.
The thing is, growth is not looking good. You've cut further your weak growth projection. Is there a sense that perhaps you are willing to go to zero after reaching, a record low of 0.5%?
What we've always said all along, Linda, is that all reasonable policy options are on the table. That said, when we look at rates, what we see is that the core issue isn't really so much having to do with the level of the rates and the pricing. The issue in Thailand has been more in terms of access to liquidity. Overall aggregate liquidity and credit growth has still been positive. But the problem has been that certain segments, especially SMEs, have not been able to access credit. So we've seen credit growth grow for large corporates and households and whatnot, but SMEs have had trouble accessing credit. And for them, the issue more is again less of pricing and more of access. So we've had other measures that we have rolled out, including credit guarantee measures, to help address that problem, which we feel is a more direct way of addressing those concerns and addressing those problems rather than trying to just lower rates.
Right. You say all options on the table, but you've said repeatedly that QE is not an option. If you take a look at your toolbox, what unconventional policy tools are there? What might you consider?
Yeah. Like I said, all reasonable policy options are on the table. If QE is a reasonable option, given the circumstances, we're happy to look into it. At present, again, given the circumstances in Thailand, we do not feel that it is the best answer to the problems that we face. The countries that have undertaken QE are responding more to issues, again, of inadequate aggregate liquidity in their economies. And as I mentioned, that's not really a core issue in Thailand. So if we were to do QE, again, that is not necessarily going to address one of the problems here, which is that SMEs don't have access to credit. QE happens again through bond markets and whatnot, and for us, the vast majority of the private financing happens through the banks. So that's just to put a little context as to why, again, we don't feel QE is the most relevant policy answer to the challenges that we face at this point. And with regards to your question about, well, what other kinds of policies that we're looking at, I would argue that credit guarantees or even the asset warehousing scheme that we launched are things that are not things that we traditionally or conventionally would do. And I think that reflects, again, that we are taking a pragmatic and flexible approach to trying to resolve this crisis and doing what it takes to address the main issues. But we want to do things that have an impact, not just do them because other countries are doing them or because there's some theoretical reason for undertaking those.
Interesting to know that QE is now an option, because you have said before that it is not. You were quite clear with that. I wanted to take a look at your GDP projection.
Well, Asli, what I said was that we don't feel that it is the most relevant option at this juncture, given the context and the circumstance of the time. But I've always said that all reasonable policy options are on the table.
Right. GDP projection for the year down to 1.8% from 3% previously, and you say that the risks are to the downside. Is it at all possible that you'll see a second year of contraction this year?
Highly unlikely. And has to do largely with just base effects and numbers. Last year, we contracted at over 6%. This year, so far, first half, we're probably likely to see a number somewhere on the order of about plus 2% year on year. So if you wanted to see a contraction for the full year this year, what that would mean is that the second half of the year, you'd have to contract by more on a year-on-year basis than 2%. That's highly unlikely now. Why? One thing that would have to happen in order to get that kind of number is our exports would have to fall off a cliff. And that's fall off a cliff compared to where it is right now. Because again, the base effect of exports from last year was quite low. Again, given the outlook in terms of the global economic recovery, which looks quite reasonable, seems to be quite intact, I think the chances of having that our exports fall off a cliff on a half-on-half basis are quite low. On tourism, last year, second half of the year, our tourists were zero. So this year, no matter how bad it gets, it's not going to go lower than that. So we're not likely to see negative tourist numbers. So I think, those two things together, I think give an indication of why it's highly, highly unlikely that we'll see a negative full year GDP growth figure for this year.
Governor, we love the alphabet soup. I mean, take a look at the recovery of your economy. What shape will it take? Will it a V, a K? What are you looking at?
Oh, we're looking at a combination of letters, Linda. I wish I could say it was a V. It's not a V. Like I said, our recovery will be slow and uneven. Let me highlight before we get to the alphabet soup the uneven nature of the recovery, which is a big concern for us. And that is, we've seen that this COVID crisis has impacted our economy in very, very heterogeneously, very different effects. Our manufacturing sector is largely okay. Exports, excluding gold, have basically recovered back to pre-COVID levels. Manufacturing production levels, likewise. But the service sector obviously has been hit very, very hard. Both the service sector that caters to the domestic economy, and especially, of course, the tourism sector. So the recovery and the impact of both have been very, very uneven, and that also indicates the slow pace of the recovery. Why? If we look, first of all, Thailand is unfortunately likely to benefit less than other countries from positive real spillovers from the pickup in the global economy, from global trade. Why? Because we're concentrated in export sectors, which are not the export sectors which are growing most rapidly. The sectors that we've seen perform very well, things like on the export front globally, things like pharmaceuticals and electronics. And for us, unfortunately, our share of exports in those categories is lower than that of our neighbors. We're more concentrated in things like autos and auto parts and whatnot, which haven't recovered quite as strongly. So the pickup from the global economy is not giving us as positive a tailwind as we would like, or compared to other countries. Second point, again, is that tourism is likely to recover much, much more slowly than the global GDP and global economy numbers. So again, that's going to be a drag for us.
I just want to get you to the alphabet, Governor. What kind of shape are you looking at?
I'm sorry, I'm getting
slow,
it.
but what shape is that?
Yeah. First, there'll be an element of a W. Why? Because we've had our third wave here, and so we're expecting to see these dips. And then again, that again suggests again that the recovery will take some time. We're looking at a getting back to pre-COVID levels in terms of GDP levels are probably somewhere at the last quarter of next year or the first quarter of the following year. The other alphabet, since you're very fond of letters, is K. We talk about K, meaning it's very uneven, right? That some sectors are going to pick up quite a bit and some sectors are not. And one thing that we worry about in terms of coming out of this crisis and the subsequent recovery is that we don't doubt that we're going to recover, but our concern is that we recover in a way that is very, very uneven. And the problems of inequality that have been longstanding in Thailand have become even more severe as a result of the crisis, both because of
Governor, I'm afraid I have to jump in here. I want to touch on the baht. I mean, it was the best performer last year, second worst performer this year, behind just the Japanese yen, down about 6% year to date. Are you comfortable with the weakness of the currency?
We have a flexible exchange rate regime, Linda, so we don't have a specific target or level of the baht that we want to see.
But you said before that the economic fundamentals of the country are intact. Is the baht reflecting the fundamentals of the Thai economy?
What we would like to see is that the movements of the bot reflect fundamentals rather than speculative flows, which in the past have been a problem for the country. Because the country we've had fairly low external vulnerability, low external debt, high reserves, and all that kind of stuff, and record high current account surpluses for quite some time in the past. We've tended to be somewhat of a safe haven for among emerging markets or currencies. So we've tended to attract a fair amount of speculative flows. So our main concern is that we want to see the bot move in line with fundamentals and not be driven by, again, speculative flows and snowballing effects.
So are you then suggesting that the bot is too low, is not reflecting fundamentals right now?
As I mentioned, Haslinda, what we look at is movements of the bot rather than targeting any specific levels of the bot.